Welcome to Taking Stock on CNBC TV 18. I'm Reema Tendulkar. With me is Sonia Shenoy. This is the show where we'll take stock of the week gone by. And thankfully, a late surge, helped the Nifty at least close in the green on Friday. But we're still below that 8,000 level. And it's been such a tough week for our markets. We were down 1.5% on the Nifty, with the mid-caps underperforming a cut of nearly 2.5%. Hi, Sonia.
Hi, Reema. Yes, in fact, it was quite a scary week, was it not? And the most important parameter, I think, is the fact that we closed below that psychological mark. The technical trend for the market is very weak now. And I think the Nifty is hiding a lot of what's happening in individual stocks. So while the Nifty is down 12% from the top, individual stocks have corrected about 10, 20%. And this week as well, we saw a lot of technology names, a lot of heavyweights, in the capital goods names, etc., sell off substantially. Banks were under quite a bit of pressure. But a lot of the commentary that we got through the course of the week indicates that these are routine corrections that takes place in a bull market. In every bull market, about 15 to 20% is the correction. So hopefully it should not last too long.
Well, only time will tell. And, a lot of experts also pointed out if there is a correction, perhaps it's not going to be too deep, from here on, considering we've already lost close to about 13% from the top. But let's get in. Our first expert on the show, Ajay Argal, who's the head of Indian equities at Barings Asset Management. Hi, Ajay, and thanks so much for joining in. So how should long-term investors approach this fall now?
Yeah, so for us, the time frame is always longer, so it depends on the time frame. And when we are looking, we typically look at 3 to 5 years. So this is as good a time as any other time.
All right. So do you see further downside in the near term, Ajay?
Yeah. So we don't look at market from that perspective. Actually, we look more at the individual stocks. And if you look at individual stocks, then there are stocks which have, in fact, given positive returns even in the downturn. And obviously, there are stocks which have fallen very, very badly over this time frame. And specifically for us, our style is very focused. So we have a very few number of stocks. So always we find that there are, if we are having a very concentrated portfolio, we are looking only for a few ideas, then there are always good ideas in all kinds of market conditions. So from our perspective, this is as good a time. We don't look at markets and we don't look at technicals and how much the market can fall, because that is dependent on so many things. I don't think anybody can predict that.
Okay, your view on the Indian equities for the rest of 2015?
Yeah, so for the, if you look at the Indian equities, so as you rightly pointed out, the market has kind of languished a bit for quite a few months, and for right reasons, because the earnings is not coming. As we have seen for the year just over, that there was hardly any earnings growth. And in fact, we are expecting that over for the coming year, we may not see too much of an earnings growth, maybe high single digits or low double digits. And that too, if there is really some pickup, which most of the corporates are saying towards the second half of this financial year. But even within that, we find quite a few stocks where the earnings growth will be upwards of 15%, some cases upwards of even 20%. So our focus is trying to get into those stocks and give them ample enough time as long as their strategies are playing out well. And we see that that's a good opportunity. Whether the market will do much or not, difficult to say, because there are quite a few sectors which are having a slowdown, and within that, some of the sectors, the valuations are not so favorable anyway. So the market is a composite of all those things, and also what's happening on the global markets. So we don't focus so much on where the Sensex or the Nifty would be at the end of the year, because it doesn't really help us. We try to identify stocks where we think can get a good compounding story over the next 3 to 5 years.
Okay, so let's come to individual sectors then. Since this is a great time to be buying stocks, according to you, sectorally, where do you see good opportunities?
So we are very positive on the financials, and I'm sure this is just like consensus that we are very positive on the private sector banks, because we see that the private sector banks will continue to grow. As such, the banking penetration in India is very low, and within that we have seen this accelerated move of gain of the market share by the private sector banks over the public sector banks, not only because of better credit quality, but now in the last few quarters we have also seen that the capital is very scarce for the public sector banks, so they are not able to grow to the extent required. So in that sense, it's an easier market share gain for the private sector banks, and there are quite a few of them where we can actually diversify even as an individual investor. So that is one space we like. Another space we like is a few specific stocks in consumer discretionary. So the passenger car manufacturer or some of the auto ancillaries where we see that the growth in very strong double digits, in some cases upwards of 20% in the earnings growth, is going to continue at least for the next 2-3 years. So we remain very positive on that space. And then we are selectively positive on a few quality growth companies, stocks in industrials, because industrials, most of the stocks are actually already priced in for a sharp cyclical recovery. But within that, we see that some of the stocks, this cyclical recovery actually is going to continue and could become structural. So we are positive on those kind of stocks, say some of the port guys in India, or the largest infrastructure company in India, because we see that apart from the growth, they are also focused on improving their balance sheet in terms of improving the working capital. So that is another space where we are positive on.
Okay, so let's come down to individual stocks. I noticed in your portfolio you have Reliance Industries as a key holding, Ajay. What were your takeaways from the AGM that took place on Friday, and what is your long-term recommendation on the stock?
So that's why, as you see, we are positive on the stock and we have a large position there, because we see that most of the negatives are already there in the price. And when we say that, that's because I think over the last 6-7 years the stock has underperformed very terribly, which means that all the negative things are already discounted, and specifically the negative things are that there has hardly been any growth over the last 3-4 years. There has been huge capital expansion or capital expenditure, and the capital expenditure is both in their main business, which is the petrochemicals, as well as Reliance Jio, which is the new business. So all those capital expenditure by and large is already done, and that benefit is going to start coming in from the next year. And so we think that the expectations are very low in this stock, and any positive surprise, even if it is very small, can really lend to the performance of the stock, which could be better than the market. And that's why we are very positively positioned in this stock.
You also have a holding in non-index large caps like Madison Sumi. So what would your view be on it? Should one just continue to hold on to it?
Yeah, so it is a continuous process, very difficult to give a black and white answer, because you continuously need to reassess whether the stock returns are commensurate with the stock returns which can happen even in the future. So if the stock has run up too much, then we might like to reduce, which we have done in some of the other names which you have not taken. But in some of the names which you all even continue to hold now, is because we think that the opportunity is still very large. And when we say that, we are happy to take some amount of underperformance, especially with respect to the market in some of these stocks in the short term, maybe 1 quarter, 2 quarter, especially because some of these stocks have already done well. So it is not as if the stocks will move in a straight linear fashion. Sometimes they move ahead a bit, and sometimes they languish for quite some time. But it is more important as to how they are going to pan out their business over the next 3 to 5 years. And in some of the stocks which you just mentioned, we see that the earnings growth can be easily upwards of 25%. And if that kind of growth continues to happen over a long period, and when I say long period, it is 3 to 5 years, then we find value even now at these levels in some of these stocks. So those stocks we continue to hold.
What about technology stocks, Ajay? Over the week we had, names like a TCS, Infosys correcting on the back of visa issues. Would you be worried about, IT names as well as the headwinds there, or do you still remain bullish on the sector?
No, so we'll need to see, and some of this is definitely always a business risk because you're operating in a different country, in a different regulation. So whether you are continuously kind of adhering to it, which these companies have demonstrated over the last 20 years that they have always adhered to. So I see no reason that it could be different anytime soon, but at the same time it's better to keep an open mind and see what exactly is the issue. So that will become to be known over the next few days, and then we can always reassess. But at this point in time, I would say that this is part of the way of doing business, and I'm sure these companies will do everything which is right from a corporate governance perspective, and they are going to handle the issue in the best way which is required for all the stakeholders.
All right, on that optimistic note, Ajay, we'll let you go, and thanks for joining us as always. We'll take a short break on taking stock, but we'll come back and speak with Basant Maheshwari, author of The Thoughtful Investor, on what you should be doing in this market momentum.